ahead and take a look at the euro dollar, see what's going on there. Again, last week we had a breakdown, as you can see here on the hourly chart. MACD basically just kind of went to a no trade right here, no trend. That's what MACD means when it's at the water line or center line here, no trend. So let's go up to its weekly chart as well. And you can see that the euro dollar a little different than the pound dollar. It's been hanging out here right around the 50% retracement part from its highs down to its lows. A lot of consolidation in here for the last couple of months as well. Other than that, on the weekly chart, we want to just, there's nothing that we can really do. It's not giving us a lot of information. Sure, we've broken above these highs here, but we haven't had the commitment. We haven't had the follow through. And then we broke high and spiked lower. And making decisions off of a weekly chart really takes at least 2 or 3 candles, not just one. So let's go down to a daily chart. And same thing that we saw on the pound. Similarly, price did break above its highs. You can see this is similar to what we're going to be looking for on the pound dollar. Price has fallen back to a fib level, a major fib level off of a weekly chart, as well as there's the 40 exponential moving average. Now again, you can see that price broke higher than right here. And if you take a look down at the MACD and you follow the mouse down that MACD, look how high that cycle in the MACD was. And look how low this one is compared to the higher price move. So it does look like we might have some MACD divergence building in here. However, we want to again remember that MACD divergence the majority of the time is a pullback and not reversal. That's pretty much what we can see on the daily chart. One more thing that we want to highlight is we do have a trend line following up through here. Let's draw that. And so there's a lot of technical support up in this area, this trend line, the 40 exponential daily moving average, and a very, very strong Fibonacci level. Any kind of break or close below this trend line, we're going to watch for a fall. So we need to have price hold in this area anywhere. This is a pretty big gap. As you can see, we'll measure it from where price currently is. From this Fibonacci to this trend line, you can see that middle number there. That's about 120 pip gap. So price does have room to play. So if we see it drop down at this level and it holds, again, we want to see a pause on the 60-minute and 4-hour charts with candles on these levels, and then see trend line breaks to the upside. That would be a very good technical level for us to hold in. But realize since there's so many technical levels, a fib, an exponential moving average, and a trend line, that it might play in that 120 pip range in there and find any one of those levels as support. And again, if it happens to come through this trend line, the next stop we'd be looking at is this 200 exponential moving average, which is right above the 382 fib. So let's see if the 1-hour chart is going to give us any place that we can look for a setup. And right now, as we're taking a look at the hourly chart, we've just had a big fall off on Friday, a big, huge fall. We're going to probably have some consolidation. And a lot of times when we've had a big break like this, price, we want to see it follow through and break on down to the downside. But usually when the Asia market will open up like this, they won't want to challenge the lows from Friday and what the major markets took it to. They might give us a pullback up. So we're going to probably see if the top of this candle, if you can see right here, this 50 Fibonacci level, as well as the top of this candle will give us some resistance and see if price will start to develop a channel in there. And then we're going to watch for the rest of the week to see if this channel is going to break back down and continue this move. And again, it's a pretty big move. And the reason we want to take a look at it and feel that it has some significance is because look at that long consolidation period that we had before that. Price doesn't usually go for this long a consolidation period and then only break out for half a day. Usually will run for several days. So again, we want to see some follow through on this move, these lows taken out this week for further move back down on the euro dollar. From time to time, we post things up on our blog, fxdailytrades.com. FX Daily Trades, even though it says Forex Daily Trades, we've abbreviated it to be FX Daily Trades. And if you come here, we'll give you tips and different things that we're watching. We'll put trade alerts up here, and you can go ahead and take a look at those. So this is a blog that we're working on to develop to continue to support you in between the videos so that you can come in here and check it out and say, well, that one trade that they were mentioning is setting up. We'll begin to be posting that kind of information here. So not only do you have the daily video market analysis, but you have a little bit more communication through written form, video form, and even quick reports on what we see happening in the pair. So make sure you come to this blog off and on throughout the day. We will get RSS set up on it. We will get Twitter set up on it. It's very new. As you can see, it's under development, but there's going to be a lot of great information for you here to come back and refer to from time to time during your trading week. We thank you for taking the time to view this presentation, and we welcome any comments you may wish to send to us. Good hunting in the markets this week.